Hi everyone. Today I'm going to be discussing the five important statements of financial statements required under the US GAAP for reporting purpose. It's called the full set of financial reporting. Full set of financial reporting of financial statements and notes. So there are five statements required by the regulations for every company to record, which is statement of financial position, known as balance sheet, statement of earnings, known as income statement, statement of comprehensive income, statement of cash flows. We will discuss all these statements one by one and in details with examples. Statement of owner's equity. So these are the five important statements required by the regulation in the US GAAP to for every company to report every year, so that the decision makers, internal and external users, are able to make their financial decisions based on these. So which has to be relevant, as we discussed in the according to the US GAAP in the previous video, that they have to be relevant, fulfill meant, and all the required information has to be with that intention that the business are on ongoing basis, as they are not going to be liquidated, and it has to be true figures, true numbers, reporting on time and all that. So balance sheet is basically around the equation of asset minus liabilities, which is equal to owner's equity. This is the equation, accounting equation as well. So we call it accounting equation. So on the balance sheet, we will see that like assets are on the left hand side and liabilities and shareholders equity on the right hand side, but both does balance on both sides as well. So assets on the left hand side, and then shareholder liabilities and shareholders equity on the right hand side. If right side is equal to 5,000, so left side is going to be 5,000 together as well. So $5,000, and then it has to be $5,000 on the right hand side as well. So you can say that if your assets are $5,000 and your liabilities probably are $3,000 and your equity um, is $2,000. So just like suppose that your assets are, as I said, like $5,000, right? And your uh, liabilities are to $3,000. Your equity is gonna be asset minus liabilities, which is 2,000. So which is all together with these two, it's $5,000. So you can say that. So on assets normally are like divided into the current assets as well as in the long like fixed assets, the long-term assets. So current assets includes cash or cash equivalent. Cash equivalent means that uh, all the securities which are going to be like convertible within a year to the cash quickly, you don't need to go to the hassle, and you can quickly convert that to the cash. So cash or cash equivalents, we as well, like um, cash equivalents, trading securities which are reported at fair value. At fair value. Accounts receivable. Why we call them current assets? Because once they're going to be received, it's gonna, for example, someone owes you cash, and that is your account receivable, so it's going to be your asset. Cash is going to be in your hands, like, so that's why. So within a year, like whatever you are expecting your customers to pay you within a year, and they owes you money, that's considered your asset. So you're expecting money to be received. So notes receivable, that's the same thing as well. And inventory is your asset. And prepaid expenses. Prepaid expenses, I'll explain them later, in the later videos as well, like every assets, current assets, long-term assets, and whatever costs are, whatever the cost is associated with, I'm going to be discussing that as well. Investments include available for sale. So these are all the investment types. You're going to be seeing in details. If you're in this field, you're going to be seeing them in details as well. So they are very important investments available for sale to the market, in the market. So securities, and they are always reported at the fair value in the balance sheet. Held for securities, held for maturity. You are not selling them like in the near future, but you are gonna make them expire on the maturity. You're gonna be um, taking all the cash for that. So investment to the affiliates, in the affiliates as well, in the affiliates. So these are your assets and investments. So other than that, non-current assets are like your machinery, like machinery, machines, or anything, whatever is not like convertible, like quickly, like, or into the cash. So then on the liability side, on the right hand side, liabilities, current liabilities includes. So it's a current portion of long-term debt, accounts payable, notes payable. That's the same thing, but you owe money to your creditors. Interest payable, whatever you need to, you owe like to others, to your creditors. Salaries, like whatever you still owe to your employees, salaries payable. Unearned revenue. Long-term liabilities, on the other hand side, is liabilities. Bonds payable, which is longer than 1 year. Deferred tax liability, income tax liability. That is on the asset side as well. If that is deferred income tax asset, that is on the left hand side. Then pension and other post retirement benefits. So that is the general um, like assets and liabilities for there are others as well, but it's just like general. So when you report that balance sheet, so it's like how it works, the name of the company on the top, like basically this is the balance sheet, but it's mentioned in the middle of the like document. So right on the top, like ABC Corporation, then it says balance sheet as of December 31st, 2025, for example. So it's basically as of date here. So it's gonna be by the end of the year, depending on. But on the other hand side, when it comes to the income statement, it's gonna be giving the position of the earning for the whole year. Like you keep recording that, uh, and then by the end of the year, you make the finals. Quarterly, sometimes like quarterly statements are given. Sometimes like so depending upon the requirement. So we will be discussing them in details in the later videos as well. So I'm going to be giving examples um, for that as well. Uh, with the passage of time, you'll see that we're going to be having more hands-on experience on that. Thank you so much.